On one of the busiest days of earnings season, I do not want you to overlook some of the companies that aren't getting enough credit from this market. I'm talking about companies like Stryker, the medical device play that makes orthopedic implants, especially knee and hip replacements, along with surgical equipment and neurotechnology. We're going to hear more about that for head and spine injuries. Last night, Stryker reported a strong quarter, modest top and bottom line beat, but 8% organic revenue growth, solid full-year guidance, yet the stock got hit anyway, slipping 1.6%. This is the buying opportunity. It's had a massive run. That's why it went down, I think. So let's take a close look with Kevin Lobo. He's the chairman and CEO of Stryker. Learn more about the quarter. He's with us for the first time in 5 years. And by the way, the stock's returned close to 170% since that last interview, trouncing the S&P 500. So, Mr. Lobo, welcome back to Mad Money. Congratulations on the quarter. Good to see you, sir.
Jim, thank you.
Have a seat.
Good to be back.
In many ways, we talk a lot about the millennials, but the baby boomers are aging. And they are basically in your hands, aren't they?
Yeah, demographics certainly play to our favor with the technologies that we have to offer. They play to the aging population, whether it's a hip or knee replacement, whether it's stroke. It really does give us a tailwind for growth.
Well, is that one of the reasons why you've had 7 consecutive quarters of accelerating organic sales growth?
Well, really, that's the engine of our growth has been new product development, where we've really spent an increased amount of money on R&D, going from 5% of revenue to over 6% of revenue. And we've been very acquisitive as a company. So we've acquired about 50 companies since I've been CEO 7 years ago. And each company that we buy tends to have a higher growth rate. So after 1 year it anniversaries, and then it becomes part of organic growth.
And for instance, you did a big acquisition of Wright Medical. Initially, I know people were saying, I don't know how that's doing. It looks like it's killing it.
Well, that deal we announced in the fourth quarter. It'll close later on in 2020. So it hasn't closed yet.
Okay.
But it's a very exciting deal. It's about.
I'm looking at the numbers.
The revenue is $1 billion, growing 10%. There aren't a lot of billion-dollar companies growing 10%. No. We had a 5 times multiple of sales for that company. For MedTech, that's actually a very good price that we're paying. But it did spook some of the analysts a little bit.
Yeah.
Just the size of the deal and in the fact that it's going to be a little bit dilutive. If you remember, the last time I was here, we had announced the Mako acquisition, which was a little bit dilutive early.
And how did that turn out?
It's been a complete home run.
And that's the robot. Please explain the robotics.
Yeah, it's robotic assistance surgery for hip and knee replacement. And so now there's no debate. Robotics is here to stay in orthopedics. When we did that deal, it was really the first company in robotics-assisted surgery. Now, 1 out of every 3 of our knees is done with the robot. We have 700 of these robots across the United States. It's been a complete game changer.
How would anyone not want a robot? I mean, for instance, like Da Vinci. Some of these things I did for the local hospital. I did a pitch for Da Vinci.
Sure.
I mean, why would I not want to use Mako? I mean, it's got to be an advantage for a hospital that has one.
Absolutely. It's been, like I say, a complete game changer, not only for the patients and for the customers, but even for the hospitals who have it. They've attracted more volume as a result. So Da Vinci is the leader for general surgery or soft tissue. Mako is the leader for hard tissue or bone replacement.
Now, neuro is fascinating to me. It's delicate, it's difficult, but I guess you guys are doing something that nobody else has done before.
Well, this is a very new industry, so for stroke treatment in particular.
Yes.
So we have 3 businesses within neuro, but stroke is the biggest one. We call it our neurovascular business. So this is endovascular treatment for ischemic and hemorrhagic strokes. So if you have a bulging blood vessel, we pack that blood vessel with titanium coils through the femoral artery. Or if you have a clot in the brain, you can pass a stent and pull the stent out. The industry is only about 15 years old. It's growing high double digits. We're treating more and more patients. It's life-saving, and also it can be very debilitating. Even if you do survive a stroke, you could be paralyzed. With our treatments, you get that treatment done and you're back to normal life.
Okay, one of the things that always disturbed me about Stryker is there's always these guys rumoring that you're going to be bought. You want to be independent. You have had 40 years of consecutive sales growth. The best record of anyone in the publicly traded.
Yeah, it's a pretty remarkable track record if you think about it. We went public in '79, 40 consecutive years of sales growth. Our market cap's now $80 billion. So when we were smaller, sure, we were subject to lots of rumors, but now we're a large medtech player. It wouldn't be so easy for someone to acquire us.
At the same time, you've got so much white space. Emerging markets, you're there, but you've got a lot of room. China, too.
Absolutely. It's only about 6% of our revenue, emerging markets, but last year we had the best year since I've been at Stryker in emerging markets. Strong double-digit growth, great performance in China, India, Brazil, Turkey, Russia, all those markets growing beautifully. Now, it took us a few years. We made management changes. We actually acquired distributors to get closer to our customers, but they are paying off. And for us, we have a huge runway for growth in emerging markets.
Yeah, well, let me ask you, you're a medical guy, and I just, I hate to say this, but like any medical guy, I'm like, just please tell me. You're in China. What are you hearing coronavirus?
So right now it's really early, and it's really that area. We don't have a lot of employees, and we don't have a lot of business in that area. Our employees, fortunately, are all safe, but it's such a small portion of our overall business that it's not going to have much of an impact, I don't think. But it's still too early, really, to gauge the impact that it's going to have.
Now, I just want to talk about the knee business. There was a period during the Great Recession where knee surgery went down. I mean, it's supposed to be like, I think, the ultimate non-cyclical thing, but how did it come back, and what happened during that period?
So knee surgery is elective, right? And if you don't stay on your knee, unlike hip surgery, then you don't have pain. So hip surgery, if you have hip pain, even at night, you feel it.
Right.
If you're off your knee, you don't feel it. Or you could delay it with some kind of a shot, hyaluronic acid or some kind of a shot. You can delay the procedure. But ultimately, you do need the knee to be replaced. And right now, the market's been very robust. It's been growing 3%, 4%, 5% each of the last 5 years.
Do you think that's right, that it's not? I mean, I've always felt that, and my college roommate had both knees replaced. I mean, you were kind of not able to do anything.
That's the issue, right? So you can delay the knee replacement, but you can't get back to playing golf. You can't get back to the activities that you've normally done. But now, with Mako robotic-assisted surgery, with doing knees without bone cement, there's less pain, faster recovery. The word is spreading that the patients not only have the knee for a long time, but they're satisfied, right? There used to be a dissatisfaction rate of around 25% with knee replacements. So you didn't have the full range of motion. It didn't feel quite as natural as a hip replacement, but the surgeries are getting better, and the word is spreading. So you're right. I do believe this will be a tailwind for a long, long time.
Yeah, I'm glad to hear you say that. I mean, someone who's going to hopefully not need it, but it's certainly it's in the toolkit.
Well, when you're ready, we'll be able to help you.
I hope I'm not that ready that fast, but you have a great long-term story, and I don't want people, when they see the stock down today, think anything other than what an opportunity.
Yeah.
Okay, that's Kevin Lobo, Chairman and CEO of Stryker. By the way, it's a fascinating company. Go to the website. You'll see all the things they're doing. It's bionic. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.